Howdy out there, folks. This is Darius Dale here to present our macro minute for Tuesday, March 15th, 2022. Starting with markets, we have stocks mixed this morning with China and Europe lagging, commodities down, crypto mixed, dollar down, global bond yields down. Big movers. If China Shanghai Composite crashing a full 5% day over day, WTI down 6% on the China COVID policy news. Big news this morning, the PBOC held its interest rate on its 1 year policy loan steady. Most economists had expected a cut for obvious reasons. And then, obviously, on the COVID front, you got symptomatic cases in 21 of China's 31 provinces. Langfang, just south of Beijing, just joined Shenzhen and Jinling in imposing lockdowns. And then you got more than 45 million people are currently prohibited from leaving their homes in China. A very different COVID response over there than what you're seeing in most of the Western world. On the macro front, the first batch of hard data out of the mainland Chinese economy in the year to date generally confirmed our grid model's view of a decelerating growth impulse. Our model still sees Chinese growth bottoming in March, and the latest uptick in COVID restrictions are supportive of that forecast. Unfortunately, the PBOC's policy setting remains too tight to attract net capital flows into Chinese assets, with the tail risk of a US led sanctions drive for Beijing's support of Russia hanging in the balance. So, unpacking the data, at retail sales decelerate to 6.7%. These are all year over year, year to date figures through the month of February. So January, February over January and February 21. So that decelerated to 6.7%. That's the lowest print we've seen since December 2020. Industrial production decelerated 7.5%. That's the lowest print we've seen since December 20 as well. Fixed assets investment bucked the trend a little bit, up to 12.2%. That's the fastest rate we've seen since June of 21. But then you saw fixed asset investment in real estate decelerate to 3.7%. That's the lowest we've seen since July of 20. So that divergence there tells you that there's some infrastructure-led, state-owned, enterprise-led fixed asset investment that's sort of trying to offset the decline in real estate speculation. And we definitely saw a huge decline in real estate speculation. Sales of residential buildings decelerated to minus 22.1% year over year. That's the lowest print we've seen since March of 2020. And then lastly, China surveyed urban unemployment rate ticked up 50 basis points to 5.5%. That's the highest print we've seen since August of 2020. Taking it to the chart real quick here. I mentioned the PBOC's policy setting remains too tight to sort of attract capital flows into Chinese assets on a net basis. And what I can see by there, we're showing the 3 month Shibor rate. That's the blue line in this chart. The China credit impulse, that's the red line in this chart. And then lastly, the black line is the triple R cut. And as you can see, China has done far less in this easing cycle, both through the lens of triple R, also through the lens of 3 month Shibor, which sort of takes into account all the open market operations, the medium term lending, all the tools that the PBOC uses to enact monetary policy in China. We're just not seeing the kind of sharp declines that typically presage big upticks in the China credit impulse that you've typically seen as a big sort of positive growth shock to the global economy. We're just not seeing that right now. And that's obviously one thing that's weighed on the Chinese assets there. Elsewhere, shifting gears a bit, we had the sharpest ever declines in German and Eurozone ZEUS expectation surveys confirm markedly accelerating recession risk in Europe. So Germany's ZEU expectation index crashed 93.6 points month over month to minus 39.3. That's the lowest print we've seen since March of 2020. And then the Eurozone's ZEU expectations index crashed 87.3 points month over month to minus 38.7. That's also the lowest print we've seen since March of 2020. With respect to today's probable range setups, getting an overbought signal in the US dollar 2 year inflation swap rate, US dollar Japanese yen currency exchange rate, and then oversold signal in Shanghai Composite. The S&P 500 that is still bearish from the perspective of our volatility adjusted momentum signal, with minus 6.6% of downside versus 5% of upside in its probable range. WTI still neutral VAMs, minus 10% of downside versus 31% of upside. Bloomberg Dollar Index still bullish VAMs, minus 1.6% of downside versus 1% of upside. 10-year Treasury yield bullish VAMs, minus 33 basis points of downside versus 16 basis points of upside. Bitcoin bearish VAMs still minus 14% of downside versus 9% of upside. Ethereum bearish VAMs minus 13% of downside versus 10% of upside. And then lastly, gold neutral VAMs minus 3% of downside versus 6% of upside. So with that, Darius Dale presenting our macro minute for Tuesday, March 15, 2022. Best of luck out there.